Hey guys, Frank Curzio here with another live video. Always love your feedback, frankcurzioresearch.com. So the title of this video is Odds for a Second Half Recovery are 0%. I know you guys are watching stocks go up right now, but I just wanted you to see something in the backdrop because eventually the economy and stocks are going to mix together because right now there's a major disconnect, and it's mostly from three sectors. We have biotech, healthcare, and technology really driving this market higher. But I want to show you something because I don't know if you remember back in March. So this is Goldman Sachs. I'm not picking on Goldman Sachs because this is the sell side analyst and what they've been saying about GDP estimates. So March 15th is the blue, right? They call for minus 5% decline in Q2 GDP and flat for Q1, right? That whole V-shaped recovery on the economic side. 5 days later, they look at this, down 24%. And remember that second half recovery we were going to get, right? That big second half recovery. That's how stocks are trading. The second half is going to be great. This is going to be quick. The rebound, unemployment's going to go back. Everything's going to be to pre-coronavirus levels, right? And even now, that's how we're trading, right? Like a vaccine's guaranteed over 3 months, even though the quickest you bought a vaccine in the market is 4 years. A lot of optimism, a lot of hope. Now, let me take it to this part. And we look, there's a Goldman Sachs report from May 20th. And if you look right here, this is now their revised estimates. Okay, so when you look right here, it says followed by a faster recovery. This is off the lows, right? So, it's easy to say, wow, this thing's going to, if something goes down 39%, which they're predicting, a 39% decline, right? 39% decline in Q2. It's going to come back. But when you really look at Q3, Q4, look at these numbers right here. So Q3, Q4, and now they're expecting negative 5.4%. And right here, well, I'll highlight, is negative 6.5%. So that's total for 2020. But if you're looking at Q3, look at Q3. Q3 is now a negative number, 7.3%. And Q4 is now negative 5.4%, right? That's a pretty big difference from what we saw here, right? Look at these positive numbers, everything's going to be okay. So what does this mean in bringing it all back together? It means that the chances for a second half recovery on the economic side are zero, right? So it's going to mean more stimulus, which I think 3 trillion already passed, and another 3 trillion in the queue, which is probably going to pass. We're talking about, so it's factored into stocks. But for those of you predicting that unemployment is going to go back to pre-coronavirus levels, with negative GDP year-over-year print on Q3, Q4, that's 4 quarters in a row, 1, 2, 3, 4 in 2020. Again, this keeps getting pushed out further and further and further. Throwing away 2020, second half recovery. Now it's 2021. Will it be 2022? You're looking at an unemployment rate at least 12, 13% by the end of this year. Again, a lot of people are predicting it would be below 5%. Again, we keep pushing these forecasts out. You're going to have to worry. More people on unemployment, less consumer spending. We're seeing more spread of the coronavirus with places in provinces in China. Another China province got locked down. In Germany and France, you're seeing areas that have opened up their economies while you're seeing the coronavirus spread again. Some of them are locking up areas. So a lot of hope. A lot of craziness out there. I know you guys are watching stocks go up a lot. Just be careful. If you're going to invest, I really like the small cap area, which has gotten killed much further than the SP 500. That's what I'm focusing for my subscribers at Curzio Research. Any questions, comments? I'm here for you, and I'll report back to you guys soon. Take care.